Hello, everybody. Welcome back to the channel and welcome to the Daily Factor. This is episode 3 of my new show. My name's Max. And on this show, I'm going to be analyzing individual securities, mainly or all high yield securities, mainly covered call securities, but some other stuff also. But we're going to analyze these ETFs using my metric, using my proprietary metric, the max factor. And we're going to do this show on a daily basis. Now, the weekly countdown show will still continue. And that's when we look at every ETF in the universe and we just count down the top 20. And that's a great show. And I've got a great reaction to that. But this daily show is going to allow us to dig deeper, go behind the numbers and look at holdings we may not see in the top 20. I have 145 holdings right now. So that means there's 125 that we don't even see or talk about that often, unless you watch my daily live stream. So that's the purpose of the daily factor. All right, now what even is the max factor, you might ask? Okay, well, traditional Wall Street doesn't have a good metric to evaluate and compare high yield ETFs. The yields on these things are so high, they broke the matrix, so to speak. They broke the total return metric. Now, it's true that two ETFs that have the same total return compound your investment at the same rate. However, all total returns are not created equal. The max factor breaks the individual components out of the total return, considers them individually, and it also considers another factor, the fund's volatility. Say a stock has a 50% total return, and say they have NAV that was down 50%, but they paid 100% dividend. Okay. Now, ETF B has a NAV that was positive 25%, and they paid a 25% distribution yield, and they ended up with the same 50% total return. Both have arrived at the finish line at the same time. Which ETF's more valuable in a portfolio? I say B is. With A being down 50% on NAV, perhaps it caused a margin call. Maybe you can't sleep at night. Maybe you sold it because you were tired of watching the price go down every day. You do you, but the max factor identifies the highest total return possible and gives you the highest yield possible at a reasonable cost in NAV performance. You guys may have heard of the investing philosophy, growth at a reasonable price, GAAP, GARP. Well, this is DARP, distributions at a reasonable price. I want a high yield, but not at just any cost. So what is a reasonable price, you might ask? Well, it's not for me to say. It's not for the max factor to say. However, what the max factor can do is it can line up all 145 ETFs against each other, and it can determine what reasonable is on a relative or comparative basis. Now, good news, today's Tesla Tuesday. We're going to be looking at high yield ETFs based on Tesla. Now, the other good news is we're going to have some bonus content. I'm also throwing in comparisons for high yield ETFs based on MicroStrategy. So we're going to have Misty Tuesday also. Then we're also going to look at Nvda high yield ETFs. Stick around and we'll get right in the middle of it. Okay, let's get started with Tesla. We have some new branding. We have a new logo. I hope you guys like the way it looks. It may change a few more times, but I think this looks pretty sharp, if I do say so myself. All right, so let's sort these Tesla. So here's what we're comparing. We have TS2, TSLP, TSLW, TSLY, and TSYY. TS2 is from Granite Shares. TSLP is from Curve. TSLW is from Round Hill. TSLY is from YieldMax, and TSYY is from Granite Shares. All right, just sorting by the highest yield. If the yield chaser in me wants to get TSYY, absolutely. Second highest yield is TSLY. Then we have TSLW with a 44% yield, which isn't bad. TS2 comes in at 40%, and TSLP comes in around 30, we'll call it 35%. We're going to give them that extra quarter point. What the heck, right? All right, well, let's look at the quarterly NAV return. All right, the best NAV return for the quarter was TS2 from Rex. Second was from TSLP from our friends over there at Curve. Howard Chan does a great job. Then we have TSLW from Round Hill, TSLY coming in with a 10% quarterly NAV return. And remember, this is NAV return only. This does not include the distribution yield. And then we have TSYY bringing up the rear with unfortunately a negative quarterly NAV return. It's down 13.83 cents. Okay, but then we also have to consider volatility. Which one of these babes is the most volatile? Well, TSLW is the most volatile, at least over this past quarter. Now, TSLY comes in second on volatility at a 46. TS2 comes in with a 44. TSYY has a 39.5 on volatility. And then TSLP from Curve is the lowest on volatility. It has a 35. Just to give you guys an idea of what the volatility metric means, it's my own metric that I invented to make one of the inputs of the max factor, but it would be equivalent to a VIX rating on the S&P 500. If you're familiar with the VIX, you might know that it trades around 12, 13, 14 kind of typically. It has been lately. That's an indication of how volatile it was. So down here, TSLP at a 35 is a little bit more than twice as volatile as the broader market. Well, TSLW is like 4 times as volatile as the broader market. All right, well, let's see what the max factor says. Let's throw them in a bucket and shake it up and let the computer crunch the numbers. Well, look at this. Rex comes in first place. Okay, let's see what they're doing here. TS2, they have a yield of 40.43%, quarterly NAV return of 31%. They're kind of mid-pack on volatility. Volatility is about a 44, which is, 3.5 times market vol, or 3 times, we'll call it 3 times market volatility. That's not bad. Second place, we have TSLP from Curve. These guys are protecting your capital well. Also, they have 29% NAV return, NAV alone. Then in addition to that, they gave you a 34% yield. Not bad. Then we have TSLY out there for the people that like a little bit higher yield. They gave you 103% yield, and they gave you positive NAV performance. Great job. Now, it came at the cost of a little bit higher volatility. It's probably why they weren't ranked a little higher. But number 3 is not bad for yield max, mid-pack. Then we have TSLW from Round Hill. Now, these guys paid a 44% yield and had really good NAV return. In fact, they had twice the NAV return that Tesla had from yield max. Unfortunately, they had a little bit less than half the yield, and they were more volatile. So I think it's easy to understand why they're one notch behind Tesla when you crunch the numbers. And then poor TSYY from Granite Shares, it's bringing up the rear. Now, I mean, they're paying a lot of yield, but unfortunately, the NAV's down 13%. Is it reasonable to have the NAV down 13% and get 190% yield? Well, it's not really for me to say, but when you compare these on a risk-adjusted basis, and you look at risk versus reward, break out the components, and you figure in the volatility, my metric says no. It says TSYY is at the bottom of the list. But you do you, like I always say. And also remember, this metric cannot predict the future. The next quarter, the Granite Shares one could be at the top of the list. What the metric can show you is kind of how this works. If you're all right with, with the set of factors that TSYY has, maybe this meets your investment goals, that's fine. Like I say, you do you. All right, guys. Well, what do you want to check out next? Mstr or Nvda? Now, okay, granted, Mstr was part of the Misty Monday, or I called it Maxi Monday, and we threw all the Bitcoin funds in together. But I threw too many funds in there yesterday. If you saw last night's show, it was kind of a mess. So I think from now on the Maxi Monday, we're just going to look at the Bitcoin, the direct Bitcoin funds, YBTC, YBT, or YBIT, YETH, Bitcoin and Ether, the ones that hold the commodity and not the ones that hold stocks like blocks and LFGY. Those are related, but we're going to start studying those on different nights. In fact, I'll give you a little hint. Tomorrow is Diversified Wednesday, and we're gonna compare all the funds that have multiple stocks in them. So let's look now at Nvda. All right, so this is one, and we have 4 entrants in the contest. Let's just go alphabetical order or whatever. I don't know. That's alphabetical. Anyway, NVYY from Granite Shares, NVII, otherwise known as NV2 from Rex. Then we have NVDY from Yield Max. And then we have NVDW, part of the popular W series weekly pay funds from Roundhill. All right, so let's look here at the yield. Let's just chase a little yield, why don't we? All right, well, NVYY from our friends at Granite Shares has a 95% yield. NVDY has a 77% yield. NVII or NV2 has a we'll call it 38% yield. We're going to give them the penny, right? And then we have NVDW bringing up the rear with a 34% yield, although 34% is still pretty good, unheard of 3 years ago. Let's see who's doing the best on NAV. Well, look at this. NV2 from Rex has the best NAV performance, and unfortunately, the Granite Shares guys have, are down 13% on NAV. Let's go over here to volatility. The least volatile fund is NVDY from YieldMax. Second least volatile fund is NVYY from Granite Shares. And then we have NV2 from Rex. And then we have NVDW, which is the most volatile fund out of these three. Let's look at the max factor. Here we have it. Look at our winner, NV2 from Rex. Good job, guys. So this is like this on a comparative basis, this has positive NAV return. You got a 37% yield. Reasonable volatility, not as low as Nvidia's volatility, but Nvidia had some NAV issues. So you throw it all in together, and that's what we have. We have NV2 number 1, we have NVDW number 2, we have NVDY number 3, and NVYY bringing up the rear number 4. Although any of these could work depending on what you're looking for. NVYY from Granite Shares with a NAV that's down 13%, but pays a 95% yield. That's not the worst thing that could happen to a guy, but it may not be what you're looking for. All right, guys, are you ready for the next one? Are you ready for micro strategies? I got my Misty Mafia in the house? I better have some Misty Mafia guys here. Come on, Misty Mafia. Here we go. All right, so let's introduce our contestants. We have Misty, of course, from YieldMax. Then we have MST from Defiance. Wow, now this is leveraged plus income. And, this one usually has the highest volatility. We'll look at it in a second. Typically does. And then we have MS2 from Rex. And then we have iMist from Bitwise. And then we have MSTW. Now, really quick, let's look at iMist from Bitwise. We're going to go behind the scenes into this one because I hardly ever talk about this. In fact, it wasn't even on the max factor, but I put it in there today. But let's take a look and see what they do. Just kind of real quick. We're just going to eyeball these guys at Bitwise. Boy, they have a big distribution rate. Now, they have a different way of measuring than I do. I measure it on a trailing 12-month basis, and I annualize it. So I annualize it if the fund's not a year old, and this fund is not yet a year old. What I wanted to show you guys here, the only knock on these guys, it's monthly distributions. And I know that's not really a knock with some people, but it is with others. But like I said, I really haven't ever taken a look at this one yet. You can see they paid a gigantic distribution their first time, $7.01. Boy, if you're looking for steady distributions, this one is not it. They went from 7 to 2 to 3 to 3.5 to nearly 4, and then back to 3. I was just rounding it. All right, well, let's look here at their actual holdings and see what kind of option strategies they're doing. All right, so right here, they have the 310 call and a 310 put that expires in the middle of November. Okay, that's a synthetic. That is, or also called a combo. Jay Pestruccelli would call that a combo. A lot of pro option traders call that a combo because you're combining a long call and a short put at the same strike. When you combine a long call and a short put at the same strike, you make stock. You essentially make stock. You get pretty much the same upside and the same downside mathematically as stock. So they're doing that for their exposure to micro strategies. But then in addition to that, they're selling some out of the money options. They have the 380 strike sold and they have the 390 strike sold. It looks like they did about half and half. They have about 1,100 contracts long. And remember, each contract is worth 100 shares. So you can multiply it out and figure out how many shares they have. But then they have about half the position sold short at 380, and then the other half sold at 390. Now, let's really quick. Let's take a look at Mstr. Okay, well, you can see right here, there's no danger right now of those calls going in the money. However, those calls don't expire till November 21st. So, that's a long way away. I mean, a lot of stuff can happen between now and November 21st. All right, back to the countdown. But I think we're going to start looking a little bit more in depth at one or two of the stocks that are actually in these portfolios every night, especially maybe one that I've never done a review on, or really we don't talk about that much. But Bitwise has some other funds that are kind of interesting as well. I think we're going to be talking about them more in the future. Anyway, all right, so let's get back to this. So I don't know if I introduced the last one. It's MSTW. Okay, let's chase some yield here, right? All right, well, look at the yield chasing. Misty from Yield Max. It is called Yield Max, right? 200%. MST's 152. IMST, the one we just looked at from Bitwise, is 142. MSTW is a very reasonable 121%. And then we have MS2, which is 48%. All right. Unfortunately, Mstr's been pulling back. So the NAV of these ETFs has been pulling back also. Let's see, the one that's pulling back the worst is MST. Well, go figure. It has double leverage. I think it's between 150 and 200% leverage. So leverage plus income, though. That's from Defiance. Then we have MSTW down 46% just in NAV. That's not total return. Their total returns is likely still positive, but total return's deceptive. We're looking at the components that make up total return. Anyway, then we have IMIS. Their NAV's only down 42%. That's not too bad, and they have a yield of 142. And then we have Misty with the NAV down 40. Well, we'll call it 42% also. All right. And then we have MS2 with they're the stingiest ones here. Their NAV's only down 33%. Now, unfortunately, they didn't pay a high yield like the other ones, though. So I wonder what the max factor is going to think about it. As far as volatility goes, there's MST and there's everything else. I have 145 stocks in my max factor database. Every time I sort for volatility, guess what's number one on the list is MST. And I think being high on the volatility list, that's not something you want to be number one at, in my opinion. Once again, it depends on your perspective. It depends on your investment horizon, your goals, and all kinds of other stuff. But all of these are volatile. The least volatile one is IMIS that has a 50 vol. So, that's 4 times as volatile as the general market, 4 times as volatile as the SPY. So, that's something else. And the rest of them are in the 50s. All right, let's crunch the numbers and see what it says. Oh, look at this. MS2. Wow, look at this. MS2 paying a 48% yield with a 33% negative NAV return, but the reasonable volatility. That's the one the max factor liked the best. Well, if you need more yield than that, it's not a huge drop to MSTW, yielding 121%. It has about 10% worse NAV return, but I mean, you can afford a little bit of NAV depletion, whatever you want to call it, when you're receiving 121% dividend. So on a relative basis, though, these look like kind of the class of the field. But then we have MST. Now, this one's lost about 60% of its NAV, and this is just in a quarter, mind you. The max factor looks back at the most recent quarter. Now, they did pay 152% yield, so that's something else. Then we have IMIS from Bitwise. It had a negative 42% NAV return, paid 142% yield. And then we have Misty coming in dead last They paid a high yield, but they're pretty volatile and had negative NAV return. All right. Well, let's now what we're going to do, this is a special new feature of the Max Factor. I forgot what I wanted to do. Let's just throw all these things in a bucket and compare them with each other. Let's just crunch the number here. All right, the daily factor. Here's the complete list with everything considered. So I ranked it by yield. Misty's at the top, then TSYY second. All right, let's rank it by best NAV return. TS2 and TSLP are at the top, and then we have the rest down here. Well, let's rank it by volatility. Of course, MST is the most volatile. Then we have MSTW. Then we have TSLW at a 56, MSTY at a 56, MS2's a 51, and it goes all the way down to NVDY from YieldMax at a 27 vol. That's only about twice as volatile as the stock market. That one may be a better investment for the lower volatility ones, may be a better investment for people that don't like a lot of change in their portfolio. They don't want to see big winners and big losers. You can use less volatile ones. However, MST is going to be beating you in a runaway bull market for micro strategies. All right, let's just throw them all into a bucket. Let's let the computer crunch it up and see who's number one. All right, look at this. TS2, would you look at that? I mean, 40% yield, 31% positive NAV return, reasonable volatility, considering it's based on Tesla, and reasonable compared to some of these other ones at a 44 vol. Great job. Number two is TSLP from our friends at Curve. Good job, Howard Chan. Need to get you on the show again, bud. Then we have TSLY from YieldMax. We also need to get Mike Coe on the show again soon. Any of these could work or none of these could work depending on your goals and your expectations. Talk to your own planner, not financial advice, of course. And the Max Factor is not a prediction tool. It's it's looking backwards. That's unfortunately, that's the way we have to do it. All right. Then we have TSLW. TSLW doing really well, a 44% yield and a 20% positive NAV return. A little bit more yield than TS2, but not quite as good on the NAV. And it was a little volatile. All right. Well, then we have NV2. Wow. That's, NV2, that's the first of the Nvda surrogates. That one is actually, we'll call that flat NAV. It's up 1%. Flat NAV and pays a 37% yield. That's not bad. That's not bad at all. Then we have NVDW, underwater a little bit, but paying a 34% yield. NVDY, what's 5% underwater when you're paying a 77% yield? Come on. There's nothing wrong with that. It's not too volatile. I'm a little surprised NVDY wasn't ranked higher. Then we have, rounding out the list, we have MS2, NVYY, TSYY, MSTW, MST, IMIST, and then we have Misty. Sorry, Misty Mafia. Thank you guys for being here for episode 3 of the Max Factor. I hope you enjoyed this. I'm constantly trying to make this into a better show. Be looking for episode 4 tomorrow night, and I've already kind of given it away. We're going to line up blocks. We're going to line up Alti. We're going to line up LFGY. We're going to put SEPI in there. We're going to line up the ETFs that are like hedge funds that have multiple stocks and that are able to switch them in and out. So, for instance, we won't be putting Big Y in there. Biggie's a good fund, but it's based on the 50 biggest stocks in the S&P 500. They aren't actively switching stocks in and out, but those other ones I mentioned are, and we're going to line them up against each other and see how that comes out. We'll see if your favorite one wins tomorrow night. I hope your favorite one won tonight. If it didn't win, remember, the Max Factor is also it's a trading index. I'm trying to catch momentum. And that's why I don't look back at too far of a time horizon. This is definitely a what have you done for me lately index. All right, guys. And remember, it can't predict the future. I really don't think anything can. If somebody has something that can predict future stock prices, they haven't given me the software for it yet. I think they're probably keeping it to themselves so they can make all the money, right? Well, thank you so much for being here, guys. I appreciate it. And you guys have a wonderful day.